Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with this multi-year volume profile over here, because the 15-minute is very interesting, but it is as important to sometimes zoom out, and then we can see that two weekly candles have closed inside this value area over here, which increases the probabilities for price to move towards the point of control at 38.7k. However, quite commonly, price likes to retest this area now as support before continuation, and you can see this in general has been a very important area on the chart. Support, support, resistance, 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 and then over here for the third time asking, price actually broke resistance, can now test it as support before potentially that continuation to the upside. Now the support over here, important levels 31.3k, which is the value area low, as well as this white box here between 31.4k and 32.6k. Above price on this time frame, important resistance is the point of control at 38.7 and the value area high at 49.5k. If we then look at the bullish Elliott Wave scenarios that would support this move towards the upside towards that point of control, then over here we're looking at a continuation of the trend. We already finished now a three-wave corrective structure in a running flat ABC, where now we're looking for a move towards the upside for highs to be made and continuation to the upside as well. If we then look at the bullish scenario from this low to the upside, then we have to think about an impulse, of course, to the upside to reach 38.7k as a minimum. In this particular scenario, we're then looking for a wave 1, 2, eventually a 3, 4, and 5. It's always quite difficult to know exactly when a wave 3 is finished, but in general you can keep an eye on the 1.618, 2.618, 3.618, and then eventually the 4.618, as these tend to be targets for a wave 3. The 1.618 is usually a minimum target for a wave 3, and you can see over here acted as a little bit as a resistance, but then once price moves through the 1.618, the 2.618 becomes interesting again, bit of resistance, but then we broke it, flipped it for as support and moved to the 3.618, which has been tested twice now. If price can break the 3.618, we can be looking for potentially that 4.618, which then also means we're going to get very, very close to the point of control. There you go, 38.7 with the 4.618 sitting at 38.5k. And we also have gold resistance over here, which is the golden box that I have on my chart, which includes the 4.618, as you can see, sitting between 38.5k and 39k. Eventually, for this wave 3, however, we are looking for a retracement in a wave 4. Potentially on the lower time frames, we could still go down. As you know, 36k hasn't yet been broken. We still got bearish scenarios there, as mentioned in the video earlier today. But eventually, you're going to be looking for a bit of a deeper retracement to the downside, where for a wave 4, with the fips pulled from the low of 2 to the high of 3, the common targets are between the 0.236 and the 0.5. 0.236 is sitting at 33.8k and the 05 is sitting at 31.2k. The 382 to the 05, however, is the most common target area of this whole area, with the 382 sitting at 32.4k, and the wave 4 is invalidated if price moves to the downside, hits the invalidation at 30.1k. Usually the invalidation is price hitting the golden pocket pulled from the low of 2 to the high of wave 3. And currently, these fibs are pulled from the low of 2 to the current high that we have on the chart. So in case price does move to the downside, then we can keep an eye on these levels over here. If we then look at the bearish scenarios, we're not safe just yet. So in this particular scenario here, we're also then looking for a bigger flat structure. In this case, in wave A, we can have that running flat. Eventually in B, looking for a zigzag, where the 1.618 is a less common target, but a target nonetheless for wave B. Most commonly, the target for a wave B in an expanding flat is between the 1.236 and the 1.38, which, as you can see, was respected, but we're now ranging above this level, of course. So the 1.618 at 36.2k remains an interesting level for this scenario, and you have to break this to decrease the probabilities of this scenario as well. And then we're going to be looking for an impulse to the downside in a wave C, where eventually the double bottom that price left over here, as well as the Bybit wick to 23.6k, will likely be filled and the double bottom likely be taken, because the target area for wave C is between the two 1.618s, which is between 26.7k and 18k. We also have some additional support areas in this particular area over here, specifically 21.8 to 22.6, Then we have 20.2 to 20.6, and eventually over here 18.7 to 19.1k. If we now look at the bearish scenario in more detail, then we are looking for a zigzag to the upside. In this particular scenario, we then look for an ABC, 5-wave structure in wave A, expanding leading diagonal, which is rare. Most commonly are the contracting diagonal. So an expanding diagonal lowers the probabilities for this particular scenario, and then a wave A, B, C, wave B retracing to the 0.382, pulled from the low to the high of A, which is a common target for wave B. That's absolutely fine. And then we're looking for a wave C to the upside. What is important in this wave C, however, is the subdegree count. So that is the blue count that you see on the chart. Wave 1, 2, eventually 3, 4, and a wave 5. And the main thing that is interesting here and important is the time between 2 and 4. Because if this wave 4 is not yet in, we're going to get a very long wave 4 if we are going to do this compared to this wave 2, right? Which really increases probabilities for the bullish scenario instead of the bearish scenario. For this bearish scenario, preferably, your wave 4 is already in, and you're now going to move to the upside in then a wave 5 with the 1.618, still a target for wave C as well, sitting at 36.4k. Still, this wave 4 is quite long compared to wave 2. Most commonly, wave 4 tends to be about 3, 4, 5th time max compared to wave 2, but really you like the wave 4 to be in and continue towards the upside. The moment you go down, it really lowers the probabilities for a wave C, and also currently the probabilities aren't that high that this is the high over here for a wave 5 and a wave C as well, based on the market structure that we have locally. Now if we then do at least zoom in shortly here at the end of the video, then this is something that I was looking at in the previous video. Now for all the analysis locally, make sure to check out the previous video. But over here, volume profile, we're now hovering at the value area high. Point of control, of course, is important in case price moves down. But when we talk about the bullish and bearish scenarios, we're either looking for an impulse continuation to the upside, right, for new highs, taking 36k, or in the bearish scenario, we're looking for a move down before eventually then a continuation to the upside, as that currently on the higher time frames is the higher probability. As mentioned, even if this is already the end of a 3 and you're looking for a wave 4 to the downside, probabilities are still higher to continue towards the upside. Now over here, an important level is over here the gap and the key level, which you will see here on the 15-minute. The low of this red candle is the beginning of this 15-minute gap, which is very important indeed. Usually when you hit it for the first time, it does act as support, and then you will actually want to see price moving away. The moment price is gonna find axis in this gap and starts to close candles inside here, it increases the probabilities to fill the gap, which also increases the probabilities for bearish Elliott Wave scenarios towards the downside. So that is something we have to keep in mind, which then potentially increases the probabilities as well to then retest the value area low of the high time frame, as well as this white area. And what you can see as well is if I open the bullish 1, 2, 3, 4, 5 scenario in green, you can see that currently this wave 4 has very nice confluence with the support resistance area on the weekly time frame, as well as the value area low with the 0.5 over here. So that is definitely something we at least have to keep in mind as well. If we then finally look at the CVD divergences here locally, we have a bit of bearish CVD divergences going on. Now the CVD divergences have played out the moment they take this low over here, so that's something to keep an eye on as well. And here, this is the AGGR chart with the divergences, and you can see, and this is something to pay attention to, there is a lower high on price, but also already a higher high on yellow, because with this green candle, you got to move your cursor to the downside, and then you see the pivot on yellow over here. That is the CVD pivot of the high, right? So currently, you can see that between this pivot here on the yellow line and where price is now, there is a bearish CVD divergence, and therefore the target for the CVD divergence is this low, which then is also very close to the gap high, right? So yeah, it could be interesting to test the high of this gap, but there's a lot of room above price still. So even if price would move to the upside, the bearish CVD divergence will just move up with price. It's invalidated if price takes the high, it played out if price takes the low. If you then finally look at the probabilities of these different scenarios, so a little bit of a higher time frame video, then currently as it stands on the high time frame and the medium time frame, the market structure and the scenarios have a higher probability of still being bullish, looking for that 38.7k. Even if you get a dip, currently probabilities from an Elliott Wave point of view are still higher to then continue to the upside and at least take 36k. That is then a bare minimum. If we then look for targets towards the upside over here, resistance areas, then the first resistance above the white box that has been tested twice now. First resistance here, 36.8 to 37k. The second one is 37.6 to 37.7k, and then we have that golden area. In general, 38 to 42k is very important resistance, as you will also see in my cycle, macro and high time frame video that I upload once a week in another playlist in YouTube. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.